Welcome back to Power Lunch, everybody. Morningstar out with its 2023 awards for investing excellence. And our next guest is the winner of the Outstanding Portfolio Manager Award. Rick Rieder, Chief Investment Officer of Global Fixed Income at BlackRock, also runs the BlackRock Strategic Income Opportunities Fund and the BlackRock Total Return Fund. And who better to talk about fixed income and more on this day before the big Fed decision. Rick, welcome. Good to have you with us.
Thanks for having me.
Why don't we start where we must, and that is what you expect the Fed to do and say tomorrow, because they have quite a needle to thread.
Yeah, Tyler, I think it's, there's a lot of focus on they can go 25 or not going 25. I don't think that is a critical an issue as, like you say, how are they going to describe the condition of where we are today and where they're going from here? Listen, I think the terminal funds rate is probably 5.25, 5.5. I think that would have been a bit higher, save this epic set of events we've had in the financial world. So I think they're going to state we're going to get there. If they go 25, my sense is they're going to say something to the effect of they're going to provide liquidity to the system. They've grown their balance sheet an extraordinary amount. Since March 1, I think it's up $300 billion. So pretty incredible. How they describe that, how they describe the liquidity they'll provide, I think is really important. If they pause, then I think they're going to say, listen, we are taking a breather to see where things are, and then probably still get to the same place. So from an asset valuation point of view, certainly over the intermediate term, I'm not sure the 25 or not makes a huge difference, but I think the communication, like you say, and how they interpret financial environment today, the economic environment today, I think is going to be critical to listen to.
And if I'm hearing you correctly, what you're saying is that whether they do something or do nothing tomorrow, the terminal rate is likely to be in that 5.25, and they may get there quicker, or they may pause and get there later. Let me turn a little bit and talk about what we've been seeing in fixed income products over the past month or so, specifically the fixed income products of banks or bank-like entities like Synchrony or Ally. I don't ask you to comment specifically on those securities, but the yields have blown out. The prices have come down a great deal there. What does that tell you about what's going on in the regional banking subsystem? And what does it tell you, if anything, about those banks' willingness or ability to make the kinds of small business, personal, auto, mortgage loans that they're famous for? Is there going to be a credit tightening?
I don't know how much time we have, Tyler. That is a complex set of questions. Listen, I think the key is, by the way, to summarize on your last question, I do think the Fed's going to go 25.
Right.
But I think, like I said, I'm not sure the import of it. However, to get to your question, listen, the Fed's moved and the terminal rate is going to, like I say, 5.25, 5.5, I think. What's happened in the banking system is you've shocked the system, and particularly the interest-sensitive parts of the economy that have created some real stress. The epicenter of that being commercial real estate, and how that's impacted the regional banks. You've had a dynamic where commercial real estate's come under pressure, which is a big portion of a lot of the balance sheets, simultaneous to uninsured deposits being high at some of those institutions. Mm-hmm. Where do we go from here? Listen, I think it's pretty important in terms of what the policymakers have done around quasi-insuring deposits or semi-insuring deposits. Like, that's important. Listen, I think it's going to be really important going forward to think about how do they there's going to be regulation in the industry. How do they think about capital going forward? How do you duration match your portfolios? I think that's going to be critical. I think you have to assume there's some contraction of lending from here going forward. And certainly for this year, and part of an economy that I would argue has been operating pretty well. Do you see some pullback in the economy? By the way, I'm not convinced we're going into a deep recession. Mm-hmm. But I think you have to assume the velocity in the system. I think you have to assume the banking system is going to at least marginally pull back as they try and interpret, how is the bank going to be regulated? How's their capital going to be, or how much capital they're going to have to run going forward? And all those are big questions we're going to learn over the next few weeks.